I can make more money long-term investing than short-term investing using the exact same trade and the exact same profit. Short-term trading is investments that are realized before 1 year. This means selling your position. And long-term investments are investments for more than 1 year. So options, for example, are usually short-term trading, and there are leap options, which are the longer-term options, but the majority of them are short-term, especially for smaller companies. Equity can be both long-term or short-term, depending on when you sell your position. So if I can make $1,000 in 6 months or $2,000 in 1 year, is there a better decision? Well, on the surface of this, no, because I can make 2 trades with $1,000 and still make $2,000 a year. But I will tell you why taking the long-term trade will net you a higher profit. So the first reason is there are fees and taxes. And these cull income. They take a substantial portion out, and usually a high return can be out of your grasp. More than often, you won't be able to control your return. And this is because it's subject to the environment outside. It's subject to the overall market. You can control your fees. You can control your taxes. And this is something I learned in Tony Robbins' book, in his book Unshakeable. I think it's a really great rule because most fees can be reduced or just avoided altogether. Well, one example is avoiding mutual funds because those take a substantial portion of your profits out. So with the first example I used, option one is $1,000 in 6 months, and I make 2 trades to earn $2,000 in 1 year. Option 2 is $2,000 in 1 year made in 1 trade. So if we factor in one of the lowest flat rate fees of $5 to each of these trades, we make 1% less on the first option and only 0.5% less on the second option. So this shows that option 2 would be better. Now you could avoid these fees altogether using the Robinhood app, and with equity I think you should use the Robinhood app because there's fees of 0, and so we don't lose any profits there. But even with flat rate fees aside, there are taxes. Now, capital gains taxes are taxes on your profits, your realized gains, and they have different rates for short-term and long-term. If I make a long-term trade, I am taxed at 15%. But if I take a short-term trade, I am taxed at my income tax bracket. And if you make more than 40 grand a year, your income tax bracket for the US is 25%. So there you almost make 2 times less on those short-term trades. Now, the only way to get around this is be in the 15% income tax bracket or lower, or just make longer term trades. Now, even without fees and taxes in mind, the question is there really a benefit to long-term investments aside from those? And there is, because long-term investments carry a stronger foundation to their growth rather than the momentum of the short-term growth that we see. So that is the core reason, but let's lay out the pros and the cons of each of these. So the pros of long-term are stable growth, usually less fees, lowest tax rate, long-term economic growth benefits, and it's not very emotional because it is a long-term trade. The cons are that it is susceptible to recessions, capital is tied up, and you might have to wait longer after that long-term for a better exit. Now the pros of short-term are you can find the best exit point, you can jump in onto the momentum growth and then get out quick, and you don't have to be affected by the long-term economy. The cons are that fees and taxes cut your profit immensely, and also the short-term events of the market can affect your emotions, and if this is affecting your emotions, which is affecting your decisions to trade, it can adversely affect your portfolio. So some trades are better to be done long-term, and some are better to be done short-term. Personally, I plan to hold my Netflix shares long-term for more than a year because I see growth over a year. But I have made trades that are short-term, as in only 1 month or 2 month equity positions. And it all depends on what you believe with that trade. So over time, I have seen my fees build up. It has cost me a lot of profit, around 1% of my overall net return. And the advice to use what you can control is the greatest advice to take, especially for an individual investor. So that was the video. If you liked it, hit the like button. This is for me to gauge which videos are the best. I also want you to comment below with a video idea for this week.